From CIBC says that more than half of Canadians will not be making an RRSP contribution before next Monday's deadline. For a look at other investment options, we have Shafik Hirani joining us now. He's a Senior Executive Financial Advisor at Investors Group Securities, joining us from Calgary. Shafik, great to be with you once again. And I want to get your reaction. You're in the business. You've done very well in terms of having a TFSA, building that up dramatically. What's your reaction when you see a poll like this?
You know, it's a little bit disappointing, but I think it actually points to a couple of issues with the Canadian demographic in general. The first thing I think is people just have a lack of financial literacy on what an RSP is and what it does. They associate it as a stock market investment or a bond market investment. It's more of a vehicle than it is an actual investment. And the second issue is I think, you know, it associates with the psychology of investing. People, you know, sometimes they get fight or flight responses when it comes to making a decision, and sometimes it's freeze, and they get paralysis by analysis. If they don't know what they don't know, then they tend to shy away from actually making a decision to buy an RSP.
Shafik, when you say it's a vehicle, it's not necessarily just an investment vehicle, how should our viewers be thinking about it? What do you really term it as?
Yeah, you know, the first thing, there's a bunch of mistakes that people make. First of all, when you throw money into an RSP, that does not mean you're buying anything in the markets. That just means you're getting a tax deduction. Now, the misunderstandings is that you get a deduction now, but when you're older, you're actually going to be paying tax down the road. So we have to understand that we're only getting really a tax deferral on our money. So if people have $100,000 or $200,000 in their RSP, they have to start looking at that money as not really being 100 or 200 grand. They should cut it in half, because when they are older, they are going to start paying tax on this money. So it's a big mistake. It's a vehicle to get us where we want to get to, but it actually isn't the total maximum of what we should be doing for our retirement savings.
So let's talk about that then. What should people be doing to really achieve their retirement savings? Is that where the TFSA comes in?
Yeah, you know, Catherine, I've been a big supporter of the TFSA. I love the TFSA approach. The government is looking at increasing limits, but I think people need to start looking at themselves rather than external investments, because people, you know, we have this dichotomy, this cognitive dissonance where we think we're here now and we're okay because we have a job, and our RSPs, well, we can do it later, but we forget that we are also our future selves. We don't connect ourselves with our future selves. So people really need to understand that you can't really build a puzzle without a picture of the box. So they do need to take a look at where their life leads them in full. So it's really disheartening that the CIBC poll does say that 54% of people aren't going to be buying an RSP, because for the majority of people, they should max out their RSPs. They should max out their TFSAs. The RSP is, the government gives you a limit. That limit is for a reason. If there's no limit, nobody would ever pay taxes again. And you know, our biggest expense, it's not our mortgages or our groceries. Our biggest expense is our tax bill. So if you want to be rich, cut that expense.
That's interesting. Shafik, what about, you know, something that a lot of people face right now as the deadline approaches, that they just haven't been doing this all year. It's very difficult to come up with thousands of dollars. What do you advise your clients to do? I mean, should they be contributing on a monthly basis? Is that the cleanest way to do this, to make sure you do it?
Yeah, absolutely. You know, you don't go run a marathon. You walk for 5 minutes, you walk for 10, you walk for 15. So, you know, this whole dollar cost averaging sort of basic idea that people hate to hear, they must do a monthly savings plan. But, you know, on top of that, people don't like hearing that, because it comes in one year and out the other year, sometimes when we've heard it a million times before. I think people forget that you can actually borrow money for your RSPs and do something called an RRSP catch-up loan. So if you have a car loan or a line of credit that's worth 20 grand and you borrow $50,000 for your RSP, the interest rate on your RSP loan is going to be 3 to 4%. The refund is going to be 20 grand to kill off that car loan. And it is a much nicer payment when Revenue Canada is paying off your car loan for you.
Wow, that's interesting. I've got to ask, though, if you've got right now the choice, you've got to make a decision between TFSA or RRSP, what do you do?
Yeah,
knowing
Catherine,
you want us to do both.
Yeah, you know, if your goal is to stock stuff away for my retirement nest egg, it's definitely the RSP decision, in my opinion. If your goal is I want some flexibility, I want some liquidity, if I don't care about the tax deduction, then it's the TFSA. But we got to understand that those are still the base of our foundation. That's not. I've never seen anybody get rich by maxing out their RSPs and maxing out their TFSAs like the books tell us to.
Right.
So we also have to learn how to build tall too.
But you've done so well, and just as a reminder, maybe you can tell our viewers how well you've done by building up that TFSA. How did you do it? And let's leave it on that note in terms of some inspiration here.
Oh, Catherine. Okay. Well, we had a couple of, well, thank you, but we had a couple of lucky years. You know, we ended up the top TFSA in Canada portfolio. For the first year, we turned 25 grand into 177, but we're actually really proud because the second year we turned the 177 into $350,000. So we won a couple of awards for being the top TFSA investor, which is nice because the TFSA is tax-free. So, you know, when it comes to investing, you'd still rather be lucky than good, I guess. How
many stocks were in there? What did you do? What went in that TFSA? I'm curious.
Yeah, you know, we had some individual high beta securities. The way I look at myself is I don't think, I just postulate that perhaps what people say diversification is to create wealth is an error. Let me just postulate that sometimes concentration creates wealth. Perhaps, you know, we have to stop thinking that we're people and start thinking that we're corporations. Corporations work for they don't work for their money, they make their money work for them. So that's sort of what I looked at. My TFSA is an individual account where I held high beta individual securities, riskier stuff.
Shafik, great to speak with you today. Thanks so much for joining us. Thank you. That was Shafik Hirani,
Catherine.
Senior Executive Financial Advisor at Investors Group Securities, joining us from Calgary.